All right, welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Capital. Today we're joined with Kirill Bensonoff. Kirill is a CEO of New Silver and fintech innovator, leverages 18 plus years in tech to drive dynamic solutions and shape the future, the financial future. Kirill, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yeah, thanks for having me, Josh. Glad to be here. So like you said, I'm a technologist. I started out in a completely different sector. I started out in enterprise IT, built a couple companies successfully, a couple unsuccessfully, and then got into sort of the fintech side of things with real estate and a little bit of blockchain and all of that stuff in the past, call it 5 years. Blockchain a little bit longer than that. I bought my first Bitcoin, I think, in a long time ago, 2013. I definitely haven't kept many of them around, so I wish I did. But yeah, that's a high level.
Yeah, Bitcoin right now is definitely pumping from its recent low. I think it was in the low 20s last year. So, and now it's hitting over 70s. So I think it might be the 60s. But blockchain and real estate. That's what we're going to talk about. Tell us about how blockchain is potentially going to change the future of of real estate and how it's purchased.
Yeah, I mean, I think there's just so many excellent use cases. It's really it could touch almost anything, and it touches some areas already, but I don't believe it's made a huge dent yet. But areas such as real estate investing, and we could talk specifics, but on the real estate investing side, things like fractionalization. Then there's areas such as purchase and sale of real estate, right? So using blockchain to enable the transfer of the deed and cutting out a lot of the extra cost and headache. Then there's obviously the title recording and all of that stuff that could be simplified. I mean, there's just so many use cases. We could talk about each one specifically, and I can give you some thoughts on that, whatever you think is most interesting.
Yeah, let's talk about we can get into how it can be used as a investment tool, but let's first talk about like chain of title, how that could help the purchasing of the properties.
Yeah, absolutely. So if you think about the process today, and I'm not an expert in that like specific area. I know the high level, I believe, as much as somebody that is generally in real estate would. So if you're purchasing a piece of property today, there's a whole process around it, right? There is the settlement agency. There's a title insurance piece, which I think is a big cost, right? And most lenders, if you're getting a mortgage, they require it. So you're buying the buyer policy, the seller policy, and what have you. With blockchain, the way that this could change is because what is blockchain, right? Blockchain is a cryptographically encrypted collection of nodes or servers, right, that could pass values, messages, and now have smart contracts that could enable intelligent computing, and do various things that whatever you program it to do. So, if we think about the process today, which requires, let's say, the property to go into an escrow for the buyer to send funds into an escrow agent, requires a title insurance in order to protect the seller. I'm sorry, protect the buyer and the seller, I guess, and the lender to a degree from potential fraudulent purchases or claims against that title. Years down the road, I mean, somebody could come to you after you buy the property and say that, hey, this is mine, right? Like here's my title, here's my deed, and you have a different opinion, so title insurance should step in. But with blockchain, I think the way it could be really simplified is there could be a smart contract that is programmed to wait for certain things to happen, and those certain things might be the buyer sending in value in the form of whatever, let's call it a stable coin like a USDC, which is denominated 1-to-1 with US dollars. So let's say they send in whatever the purchase of that property is in that stable coin. The smart contract now receives that stablecoin, so that piece is done. And then the seller would have to be holding a token like an NFT that represents the deed to that property, right? So they're holding it in their wallet. There's potentially no need to record it with like any kind of I don't know, a county or a town, land deeds, land records, or anything like that. The seller is holding that token in their wallet. As soon as the seller sends it to the smart contract, the buyer sends their value to that smart contract. The smart contract knows that both parties have fulfilled, their intended promise, and now it could send the funds to the seller, and the deed or the token that holds the deed to the buyer. And that really could be the end of that transaction. There's probably other things that go in between. I probably haven't thought of everything. There also could be insurance in this form as well, right? There could be some kind of a third party that provides an automated like insurance policy that also knows that, hey, if I don't know, the smart contract didn't do its job, or one of the parties didn't do its job, it could step in. But all of these things are automated, right? So you only have the effort to create this, the software developers or what have you, then obviously support and somebody else, maintaining all this stuff. But it's certainly a lot less overhead, right? A lot less people would be involved in this than they are now. So I think that's like the one use case that when that happens, that'll be huge. It'll change the industry literally. But it is very difficult to make happen because, we've been doing it this way for hundreds of years. There's certain service providers. There's just ways of people used to doing things, and towns and cities, and everybody has to kind of get on board at a similar time for all of this to work. So it's a huge undertaking.
And anytime you have a disruptive technology, you're putting a large portion of the industry out of business, essentially, because you're doing away with jobs, people's livelihoods. So I think that there's some people at the top that hold back technology from devastating an industry, or it just takes a lot longer. But chain of title, if there's a blemish on the title or something gets recorded, and the smart contract picks it up, I mean, it can automatically kick it back, and then you go into like a manual review. But basically everything starts around building out the smart contracts, and then it's kind of like an NFT, I believe. Is there similarities to like an NFT, smart contract NFT?
Well, a smart contract would be something that's on chain that kind of makes decisions, pre-programmed decisions. If A happens, then do B, kind of thing. It could, they are getting more and more complex as well. But it's really they started out as being pretty simple code bases that made decisions. Now, obviously, you could tie multiple smart contracts together. So if something happens with this one, it'll pass over to another one, etc. But at a high level, that's what it is. An NFT is just a token that sits in somebody's wallet and that can collect can contain a data set. We're all familiar with the NFTs that kind of popped a few years back that have images tied to them, right? But the NFT really, I mean, it could have any kind of data. It could be image, or it could be data describing this piece of land and the property and things like that.
Yeah, but the NFT is what holds the value. The smart contract is what holds the value. So it's putting in your programming what that agreement needs to look like, and and then that smart contract could essentially go into your wallet as well, and that would be the potential deed to the property, maybe showing that you own the property.
I'm thinking of a deed as that NFT. That NFT will describe, the geographic location and the structure, and what abuts and whatever, right? So that would be most likely the NFT. The smart contract would be, instead of the settlement agent or an attorney's office or a title office, whoever's doing this closing, that could be done by the smart contract, because it'll validate that the right deed is sent. This NFT, right? The NFT will be sent to it. It'll validate whatever it needs to validate inside. The data is correct. Maybe it'll check certain other things, right? And then it's going to validate that the value, the cryptocurrency value, let's say it's these USDC, so You're buying a house for 300,000. You send 300,000, USDC tokens to the smart contracts, and then it validates that it received that. So once everything is validated, it knows then
Sorry.
it
Oh, it's my
no
phone.
problem. It knows then to send the deed to its owner, to its new owner, and then the value to its to the seller.
That kind of segues into the next part of this is tokenizing real estate. So that's kind of the whole other piece of it is where when you tokenize real estate, if you can elaborate on this, it kind of opens up the doors to an investment vehicle.
Right. So I think this isn't, this concept is not new, right? People have been doing, whether it's in a crowdfunding or sort of a private offering type of a manner for quite a while. So this concept exists. What I think blockchain can do here is, again, simplify and enable less middleman involvement, and thus lower costs, lower fees. So think of the way that so if we're talking about, let's say, a publicly traded security like a REIT, right? Today, obviously, it costs this REIT company a fair amount of money to maintain the various compliance aspects, and one of those aspects is maintaining a list of the investors, right? This is mandated by the SEC if you're doing this in the United States. Some of these things could be done on chain, right? So now, instead of having a ledger somewhere that says that these 1,000 people are current owners, and if one transfers, then this broker dealer has to report that now there's a new owner, right? You could have automatically, blockchain can see that let's say your one share is represented by a token, by an NFT or a similar type of a token. You could essentially have a smart contract that knows that, all right, you've got these 1,000 wallets, and now it moves from one wallet to another. So now there's a new owner. I mean, I think the challenge is like tying the wallet to an actual person, but that has already been solved as well. There's ways to do KYC on chain so that a certain smart contract could know, like, okay, this is this person's wallet, right? Now, when you're moving the token to this wallet, it'll know that this is the person. You could also have and like whether you're accredited or not, things like that. This is like in a publicly traded scenario. In more of a private or a crowdfunding type of an offering, it could be very similar, right? Like, you still want to track your investors. You want to maybe like limit or prohibit movement of these tokens. So like if somebody wants to sell on the secondary market, but maybe it could only be sold to other accredited investors, or maybe not. Let's say if it's like a Reg CF or Reg A type of an offering, right? You could sell to anyone, but there's also rules like how long you have to keep. You can keep it before you sell it, things like that, right? So all of these things, they could be enforced by a smart contract. You don't need to have a compliance department that somebody would go to and ask, can I sell my shares now? And then they have to go and look up, and then, no, sorry, you can't sell them yet. You got to wait another month, right? Like, all of this stuff could be automated. So that's, the compliance piece of it is like a huge area. Sort of the primary sale, when the actual, like when you're tokenizing or breaking up a piece of real estate, let's say it's a commercial, building, and you wanted to sell, units in $100 increments, and you're trying to raise, I don't know, $10 million, right? So that you could do that again, and you could sort of have an offering again, whether it's accredited investors, non-accredited, and then folks will come in. They'll be able to send funds using blockchain, again, stable coin or whatever you decide to accept. And then in return, they'll get their shares in the form of a token. So it's just, again, even that process could be made, could be simplified rather than, going through a lot of the manual steps that we are now. Even though like digitization has obviously helped out a lot. Like if you think even a few years ago, right, we didn't even have we weren't even able to DocuSign these documents a lot of times. I mean, now we can, and that's been a huge help. Like we could essentially buy these offerings online, invest online, right? But I think the blockchain is like the next step forward.
What are some platforms that you know of where that they're tokenizing real estate, making an offering, and they've got the KYC and everything integrated? What are some platforms for the listeners to check it out?
Yeah, I know. Like, I don't know who's doing it now actively, but I know Republic has done some. They have like a real estate, arm or division, or maybe it's a separate company that they run. But Republic, they're big in crowdfunding, equity crowdfunding for companies, but they also have, I believe, they still have the real estate. Then there's a company called Realty, that does. This is what they do. I know I'm pretty sure they're doing this fairly actively now. Then there's a company called Lofty, that I know, Lofty.ai, which has been doing it for a while. So those are the three that come to mind. I'm sure there's others out there, but those are the three. And I just want to kind of preface, you guys do your own due diligence. Obviously, I have not used any of the three for those use cases, but I know that they've been doing this for quite a while, and I believe they have a fairly good reputation.
Yeah, it's almost, well, it's a whole new industry, so there's going to be a lot of new regulation, of course, that has to come down. I think that's what's holding up a lot of it. And then there's a lot of bad actors out there that are just looking for opportunity to take advantage of people. So definitely need to do your diligence. But I mean, that opens up the door for opportunity to create something that could be almost destined to be in the future of how real estate's transacted. Um, what are some opportunities that you could see that people could potentially get ahead of?
Yeah, I mean, aside of like investing in cryptocurrencies themselves, which I do not recommend. I mean, this is, I think, a very risky investment, and there's probably even more bad actors there, right? Because you have like basically the global world, it's very difficult to kind of figure out what's good and what's not good. And then, I feel like there's the value. I mean, again, like if you're interested, I would just kind of look at like Bitcoin and Ether, maybe the top two. But then in the blockchain, like using the technology itself, I mean, really it's kind of, it's pretty wide open. I mean, I think it's honestly, there's probably been a bit of a slowdown in the last few years just due to the markets, right? Because the markets heated up, and it's very similar to what happened to the internet, right? If we think back to like the late 90s, early 2000s, right, before the dot-com bubble burst, right? Like we had everything under the sun going like dot-com. Like we had, I don't know, every company, everybody that could got online, and like at the time it was like, all right, what's the actual use case, right? Like why do we need a .com for this? And at the time you couldn't really even buy anything online, right? It was just in a lot of cases just a website with very little use to it. But then it took a good decade afterwards for the internet to really kind of become a tool that is indispensable, right? Like now we do everything online. I think blockchain might even be slower because of the fact that it does touch on the financial angle a lot, right? Internet is pretty broad; you could do many things there. Um, with blockchain, you really, it's about transferring some kind of value, or buying, selling things. A lot of the cases, though, that's not all it is, but most of it is. And so I think that obviously will, there's just a lot for people to get used to. There's a lot for regulators to get their heads around, and then there's a lot of companies that are starting out, and they're, many. I think there's bad actors, but I think there's the majority of folks are trying to do the right thing, just like anywhere else, right? Like you have 99% or so that are trying to start a company, trying to be good and trying to do the right stuff, but then this 1% or less that gives everybody a bad name. So that's unfortunate, but that's, I believe, how it is in many new industries.
Yeah, yeah. I think the tokenization of real estate is it's kind of exciting in a sense because you can fractionalize the real estate, tokenize it, and then you can turn something that's notoriously been illiquid into liquid by being able to transit in and out of the investment, selling your tokens or buying new tokens of the piece if there's some for sale, without it being necessarily like a REIT. I mean, there's a ton of different use cases. I know Harbor is actively out there taking down large properties and tokenizing real estate, more private offerings. Um, but it kind of gives you a sense of what's to come. And Blackstone, I don't know if they've entered the arena yet or not, but you've got BlackRock, they've just created an EFT for Bitcoin along with some like Fidelity. So the concept is staying if they've went through all of the scrutiny of creating EFT around essentially Bitcoin, because Bitcoin's off of blockchain. So it's tried and true. It's there. It's going to get more regulation. But what do you see the future of real estate being using blockchain? Is it 5 years, 10 years, and how do you see it being incorporated?
Yeah, I think if you talk about like the transactions that we started talking about in the beginning, that will probably be 10 to 20 years in my
Okay.
guess, right? Like that's probably going to take the longest because, and I could be wrong. Hopefully, I'm wrong, but that's going to be the hardest to implement just because of the entrenched industry and everything else. I think the fractionalization is here today. Like you mentioned, some folks, there's definitely others that are doing this stuff. I think the other great use case or a great value for fractionalization using blockchain is if your investment is paying you some kind of an income, dividends and what have you, with the blockchain, you could literally get paid, in near real time or on a daily basis and things like that. So you can get your payment, your interest payment, very, very quickly. You don't need to wait until the end of the month, the end of the quarter, and wait for that wire or ACH to come in, right? They could stream your payments to you, and however the issuer chooses to do it. So that's just another value to this whole process. But I think fractionalization using blockchain is here today on a smaller scale, but it is here. And as you mentioned, the sort of the major institutional players like BlackRock are in, and they have an on-chain tokenized treasuries offering now. So it is purely on chain. You could buy it. I think it's made for an institutional, qualified purchaser type of a use case with a really large investment minimum. But this is just kind of the beginning, right? But at least we have the largest asset manager who is now playing in the space. So that's huge.
Yeah. Where do you see your company, New Silver, taking a play at everything? Where are you going to take the company?
Yeah, absolutely. I mean, so New Silver, I mean, we're a fintech in terms of, we built some technology to improve the lending process. So our customers are people that do fix and flip, ground up construction, buy and hold type of deals as well. So we build tech to kind of make the whole process faster, easier, more convenient. We do online underwriting. We can get you a term sheet within 5 minutes of you starting the application. That's really our value add. Now on the back end, on the capital markets end, we have our New Silver Income Fund, which is for accredited investors, and it invests in our blockchain-based process that essentially helps us, tap capital markets that are blockchain-based. So we have sort of a securitization, a private securitization like offering where we have blockchain-based investors, where they're institutional or just accredited, that have come in and provided liquidity, for the loans that we originate. So that's really the piece that we're working a lot on, and it's come a long way. I mean, we've done, I think at this point, it's around $100 million of these loans on chain. So it's grown significantly. We continue to see that grow as well. We're investing a lot into that.
That's phenomenal. So you're underwriting, you're getting the deals in, the deals, you're underwriting them, making sure that the as is value, but you're still getting appraisals too, I'm assuming. Is that?
We are, yeah. We're doing.
Okay.
I mean, we're doing a tech first. However, we're also doing a traditional approach as well. In most cases, we get an appraisal prior to close. In some cases, we can close without an appraisal.
Got it. So you can do a desk appraisal, make sure that it comps out, and then based on what work's getting done, you'd find out the ARV quickly as well. System can pull all of that up, and then basically prove out the deal, and then you're converting that over. I guess how does the deal go on a blockchain? What does that look like?
Yeah, so we essentially we tokenize. So we create, each deal has this NFT token with it, and then it gets essentially placed into a pool of other deals, all tokenized. and now there's a pool of loans, right? Each loan pays into this pool, it pays its interest into this pool, and then investors get paid out of that pool. So yeah, I think it conceptually works similarly to like a bond offering, a private securitization, or a public one is pretty similar as well. We have a trustee, we have an indentured trust, so we have a chartered trustee overseeing the investor interest. So if something goes wrong, the trustee could step in and do whatever is right by the investors.
Got it. What if, yeah, so what if a deal, I guess a deal doesn't pan out, it goes to foreclosure? Do you take it off chain, or I guess you just retire the token? What does that look like?
Right. So if a deal goes bad, we certainly could, like we as the originator, could buy it out of the pool and then deal with it ourselves. Or we could let it stay on chain and then it'll impact the returns. But it's a bunch of deals. So like if one or a couple of deals go bad, I mean, they're not going to really kill the whole pool, right? I mean, if a lot start going bad, of course, it'll have an impact just like anywhere else. But we have like for the few in a few cases where we've had some challenges with the deals, we have bought a couple out and kind of dealt with it off chain ourselves. So we've had no defaults in this pool of on-chain loans to date, and it's been going for about three or so years. Yeah.
So, and they're fix and flip. So you're talking 6 to 12 month terms?
12-month term with some extensions. I think the average is right around 12 months just for repayment right now.
Okay, got it. And then interest rate, how is that determined on blockchain? Just the same as
Yeah, we have like so essentially we have like a risk profile that was built out by data scientists, and based on the interest rate, in the real world, it kind of assigns an interest rate with a certain percentage of a possibility of default based on historicals. So yeah, it's more or less an automated process. Every loan, again, depending on its coupon in the real world, gets assigned a certain rate in the pool.
Okay, so I'll do a fix and flip. I'll send it to you for the deal. You'll underwrite it. You'll approve it or deny it. I'm assuming it's an LTC, loan to cost, based
Correct.
on how big. And then so the construction draws would be based on we'd submit the request. You would send the inspector. You would send the funds for the next phase of construction, and then say I want to sell it, and then go through. Is it just going through traditional title, and then they're communicating with you all?
Yeah.
Okay.
The like all of that stuff, that's not our expertise, and yeah, it's all traditional. We have a servicer that real world servicer that handles all the payments in US dollars. So we transact everything in US dollars. When it's time to put it on chain, we convert it, and then we convert it back. So all the transactions are US dollars. Title and everything else works just like it would. I mean, so for our customers, we've basically made the process more convenient by essentially bringing everything online and bringing in our pricing engine. That's kind of how we started out as a company. We had this pricing engine that could figure out the as is and ARV values pretty well, and helps with underwriting. It helps like putting out term sheets quickly and things like that.
And that's all built off of Web3 as well?
No, our process is just Web 2. Like that doesn't go on chain. That's just processed using API and analytics and things like that.
Okay, got it. Very cool.
Yeah.
Awesome. I like picking your brain, because this is definitely, to me, it's the wave of the future, and learning about it definitely can't hurt anybody. Just getting familiar with the terminology and how things can function and work. I think it's important. It's kind of like somebody coming and telling us the World Wide Web is coming, and we can either learn more about it or choose not to, and then it comes.
Yeah, no, I mean, I encourage everybody, and like for the folks listening and watching this, you're doing the right thing. I think kind of just being interested in this, at least. I mean, this is definitely something that will be pervasive in our world very soon. And again, a lot of times it's already being used in some cases, and some of the larger institutions are using blockchain, and we may not even know it. So a lot of folks are going to build apps and other tools that will use blockchain, but will present it to us on our phone. So we may not even know in some cases that blockchain is behind this whole thing.
Yep, totally agree. Kirill, if somebody wants to reach out to you, learn more about it, about blockchain, learn more about your company, possibly invest, how can they get a hold of you?
Yeah, just newsilver.com. You'll see, if you're interested in looking at our New Silver Income Fund, you'll see a link for it on our website. If you want to get a hold of me, happy to put my social media. I mean, my LinkedIn. You could search for my name. I don't think you'll find many with my name, so I'm easy to find. So yeah, LinkedIn is the best way to get hold of me directly if someone's interested.
Awesome. Definitely appreciate your time today. Look forward to following you, and we will talk soon.
Cool, Josh. Thanks a lot.